Good evening, good afternoon, good morning to our valued followers. Welcome to yet another episode of the Africa iShare podcast, where we discuss the issues that are very important for the continent and try to come up with ideas on how best we can maximize what's there to steer development in Africa. Again, I'm with Christine, and today we're going to be talking about digital currencies. What are digital currencies? How have they impacted Africa? What is the regulatory space like? What do we need to be attentive towards, and all these other issues? So I'm going to leave the time to Christine to just introduce herself. Then I can introduce the discussion in depth.
Okay, thanks, Chido, and hello, everyone. It's great to be having this conversation, quite a relevant conversation, if you ask me, about digital currencies and the prospects and the challenges and what is going on in that area. So, Chido, back to you.
Thank you so much for that. I'm just going to talk about to briefly introduce digital currencies, right? So, well, most people when we talk about digital currencies or crypto, they obviously start thinking about Bitcoin, which is not a very bad option to start. But I actually realized that that's not where digital currencies started, Christian. So in 1996, there was virtual money or internet money that was introduced, which was called e-gold, and it grew to several million users before it was shut down by the US government around 2008. So when that currency was shut down, obviously tech the tech world, the software developers had already looked at the successes and the potential that it had of dismantling the existing traditional banking systems. So in 2008, after the collapse of the great financial collapse, I'm sure we're all familiar with that, Christian.
Mhm.
There was so much distrust with the traditional banking system that a group of people or persons came up with Bitcoin, which was underpinned by blockchain technology, and it became the most widely known or understood digital currency or asset. To date, we have a lot of digital assets or digital currencies that are there. We have Ethereum, we've got DM, which is uh, spearheaded by Libra, which is owned by Facebook. We have got the Dogecoin and all these other currencies. But obviously, the most widely talked of is Bitcoin, and lately the Dogecoin also. So, Christine, what
Mhm.
do you think about these cryptocurrencies? I mean, I know for a fact that you have had people inbox you on social media platforms, especially Instagram, telling you about how they're Bitcoin traders and they want you to join the trade. And we have seen what Elon Musk has been doing of late. There was a time that he was supporting the use of Bitcoin, and he was actually saying you could now buy a Tesla using, and then all of a sudden, through that,
Mhm.
all that buzz that has been ongoing with
Mhm.
regards to digital currencies, bearing it in mind that none of these are being issued by central banking systems. What do you have to say about them? What do you think?
Okay, Chido, thanks for that. And as you said, there is quite a number of them. And then also I think to that list I will add other not traditional cash payment systems, which would be like mobile money and that kind of thing. But then to start with the cryptocurrency, it's quite, we've had a discussion here on Africa Asia in the past about them. And as you note, there are quite some interesting things that you could say about them. First, like you say, they are not regulated in a traditional way, like by the central banks. So they are like central banks would have prudential guidelines that would regulate like the financial institutions, which are like the incumbents, and then you would have like rules on like how to trade in cash and such kinds of things. But with cryptocurrencies, for instance, there's also the element of anonymity. You don't know who owns who has the bitcoins right now. You don't know who will be buying them, so that even there's a lot of money laundering that could happen through like the anonymity that's given. And also, as you said, like the buzz that you said about like on Instagram, is these currencies get momentum based on how many people can accept them. So, for instance, you find that the larger the network who is accepting these kinds of cryptocurrencies, the more value they get. So you'll find like there are some places where they say now we are accepting payment in any form of cryptocurrency. And then that way means the more people are willing to trade valuable items in by receiving these kinds of payments, then the more value they gain, the more demand there is for them. But then, as you've noted, there are a lot of things around them that raise questions. Like for instance, if my bitcoins get lost and there's no backup for them, then what happens to me? If, for instance, we have like a wallet or somewhere where we have all kept these currencies together, and then it disappears or there's theft, where can I go to enforce my right? So it works both ways, where you see the owners of these assets are somehow exposed, but then also at the same time, also the public, you don't know how much you should rely on them. Even if, as you know, this is going to be because of the payment systems, like the Facebook direction that they're taking. This is going to be the future, especially for payments done on social media platforms or any platforms. But then also to mention, when you think about digital currencies, I mean, in my mind, you think of going cashless. You're not going to use cash to trade. So it could be like, for instance, giving the example of Kenya, which Chido could also speak about. Zim is the revolution of like the mobile money, where you give cash and in exchange get money on your phone, which doesn't have to be a smartphone. And now, like such payments, like for instance, right now in Kenya, you find like all government institutions now accept payment. They're accepting payment in mobile money. Again, the advantage that comes with is that much corruption, much, like cash being theft is not there, because to buy most of the things, you just need to have your mobile money. You get a good to you and you transfer the virtual currency to the seller. So it has its benefits, I would say, and a lot of them. But then also on the downside, there could be challenges. But then I would say, like for Kenya, the government has really tried to regulate how the mobile money landscape looks like. But yeah, it's still quite an interesting thing to look at. Chido?
Thank you so much, Tristan. I'm going to move away a bit from mobile money initiators, something that you've really introduced, and I feel like it's something that you can also speak on, and go back to a bit on crypto assets. But you raised something that I was, you know, hoping to say later about how there is no certainty in the industry, right? You would realize that when this whole buzz for cryptocurrency started, it was obviously coming out of the failure of the banking system, right? To protect the interests of his customers. And we now have people who are outsiders or not even part of the banking system issuing out currencies and integrating them, trying to integrate them into the formal system. And then we've got Bitcoin, we've got all these other ones that we've spoken of. But I like what you raised, that when they were doing this, they never really envisaged a situation where it would also become a problem for the customer that they think they're protecting from by taking them away from the traditional banking system. What do I mean by that? You spoke of how there is no redress when if a transaction goes wrong for some reason you have lost the coins that were in your e-wallet, which part can you go for enforcement, because these things are not widely or adequately regulated, right? We also look at how there is no stability when we look at most of these crypto assets. Think about it. Elon Musk literally has power to change or to affect, so to say, the price of crypto assets on the exchange market. The moment that he said he supports Bitcoin, the exchange rate for Bitcoin to fiat currency, it skyrocketed. And everybody felt like, oh my word, we were all supposed to buy Bitcoin, invest in Bitcoin because this is the most sought after currency. And then I would assume he was bored this other day and woke up and was like, no, I don't think I like Bitcoin anymore. I'm supporting the Doge currency and I'll support it against Bitcoin, Ethereum, and all these other DM and all these other crypto assets. And guess what? The prices for Bitcoin literally went down. And all of a sudden, everybody is getting hyped over the Dogecoin. So you see how it is that the currency itself is not stable. It can be affected by anything that happens. Anybody, it's so different when we start looking at fiat currency, which is actually affected by economic or legitimate economic indicators or factors. Like, okay, we can talk about how currencies were affected by the oil crisis. That's something that is economically legitimate, right? We can talk about how COVID-19 has affected currencies on the exchange market because production has been low. There hasn't been supply and demand. But I can't say the same for crypto assets. It's literally a tweet that can probably leave everyone losing all that they would have invested in that currency simply because somebody else tweeted something against that currency. And which also wants me to introduce this idea of DM, which is part of an initiative, a payment system initiative by Facebook under the Libra Association, which is trying to come up with stable coins, right? So stable coins, they are actually they've got the potential to disrupt the crypto space, mainly because they are a bit stable, as the word would suggest. So basically what's happening is that they are a form of digital currency that is pretty much aimed at mimicking traditional stable currencies. And they are collateralized, so to say, by a value of an underlying asset. So in essence, what Facebook is trying to do is to have these stable coins that are pegged at a ratio of 1:1 with other certain fiat currencies, right? So we can have the stable coin being pegged at 1:1 with the US dollar or the euro or the pound so that they can easily be traded. So what then happens is price for the stable currency is not affected by Christine's tweet on a Sunday evening or Chido's shower to shower thoughts that she has on a Saturday, but is actually affected by what's happening on the actual currency market because they are underpinned to fiat currencies that actually do exist. So with that, you would realize that we can now start talking about, there is transparency, there is security, there is immutability. It actually then deals with the idea and in a way helps purpose. Yes, regulation is another thing, and whether banks are accepting it or not is another thing. I was actually reading that the Bank of England is so against the stable coins being linked to the pound because they think that that's going to completely kick out, the national banking system from the horizon, which could be true, Christine, if you think about it. But I feel like what you said is very important. That's where the world is going to, right? We're going to get to a point where sex is going to be phased out completely. And I can tell you that that's very possible because in Zimbabwe, I mean, for a very long time, it got to a point where it became so easy for you to come across gold on a random day on the street than it was actually come across fiat currency in Zimbabwe. So everybody was using mobile money, which basically is a digital form of currency. So we need to actually start embracing it and then look for ways in which the traditional banking system through fintech can actually be, say, rubbed into the whole digital currency system. I know for a fact there are central banks, the South African Central Bank, for instance, they are actually looking issuing crypto assets or digital currencies from the main banking system so that they get out of business as the Bank of England is probably postulating. Back to you, Christian.
Mm-hmm. Interesting. And I think, as you say, the whole thing about cryptocurrencies was to avoid a third party controlling the transaction. So that, as people have noted, it should be as easy to send money from one person to another as it is to send an email. So that right now, if I'm sending an email to someone anywhere in the world, it's an instant thing. I send it right now, they receive it. And then also like the transaction cost for that should not be so high and prohibitive, because right now what happens is in the traditional currencies, as you send the money through the banks, there's the bank charges, there's the exchange fee, there's like all these fees that you have. So the whole idea was to eliminate the third party. But then with that then comes, like the things that you've looked at. And I think the solution that you're suggesting, like the banks to look more towards having fintech solutions, so that it's not fully to do away with like the whole of the digital currencies and in particular the cryptocurrencies, but to find a way of merging or coming up with a compromise between the two. But then also, I think, to be fair, like across Africa right now, I don't think the society is entirely ready to go to become cashless. One, and two, even leave alone being cashless, but also going into the cryptocurrency. So it's one thing to be cashless when possibly you're using things like mobile money, which have been tried and tested, and within each country you can actually know like this is Econet, which is offering this solution, or this is Safaricom who is doing this. It's quite another when it's you barely know who right now is owning Bitcoin or Ripple somewhere in the world, and I can go to this person in case I have a problem, and in case, or for instance, I want to dispute something, a payment that I made, I can go and ask reverse the transaction for me. So I think to adopt these currencies as mainstream is going to take a while in Africa, if you ask me. But I would think also for the rest of the world. But then also, especially because even for the banks and the governments, as you've noted, on the reaction towards like having more stable digital currencies like the Facebook one, or the one that Facebook is behind, to make it a bit more stable, like governments may not be so open to that. So and I think it's because in the minds of most people, the government has been central to how a currency within a country, like is operated. The government has been so much involved. The central banks have been involved, and slowly the governments will be losing that control, and it's going to go into private hands where there will be no third party to track transactions. There will be no third party to have visibility of what's going on, which is a bit scary just for the user, but then also for the government. And also another thing I would mention is what that means for the governments also from collecting tax, which is also like a thing that makes them governments a bit cautious, because right now as it is, it's difficult to tax the digital economy. For instance, someone who is making a payment for Netflix, the government has no visibility of that transaction, so that they tax it, whether to subject it to value added tax or goods and sales tax, or even to collect business tax from Netflix. And the reason being that you're not able to, like, first of all, the transactions are split and they're being paid by individuals in different places and at different times. So to even consolidate those payments so that you assess tax on them becomes difficult. But then also to have a bank like disclose all this information for you, all payments that were made to these people, all payments that were made to Facebook and such a person, assuming they went through the bank, is a problem. Then in the midst of that problem, introduce a cryptocurrency where there's completely no visibility, there's no even bank. Like the government cannot even go to the bank and tell them disclose this information. If the day, let's say for instance, Netflix starts accepting cryptocurrency, that means that the transaction will be purely invisible to any third party. So it can only be Netflix must be voluntarily want to comply with its tax obligations. Again, governments have traditionally not been they've been using tax as a way to, not as a voluntary thing. You come and tell us here's the money and you take it. That's not how it has been working. It has been more coming from almost a very firm approach from the government that comes and assesses you and tells you give us the money or we will like freeze your assets and such kind of thing. So Chido is moving to a very interesting time where like government will lose control. And if you ask me, it's quite a scary time to be going into, because you're not very certain who gets this control when the government loses it. When there's no third party to transact in these things and regulate them, who really will regulate in that case? And as has been noted, cryptocurrency is prime ground for money laundering, and for illegal business, all manner of trafficking and such kinds of things, because again, there's no third party to monitor the transactions. Chido, those will be my last comments on this, so you can take it away.
Wow, that was amazing. Especially when you brought about this idea that crypto is like the breeding ground for all illicit transactions and financing of terrorism and all these other issues that we are all scared of. It's a very important conversation, and you'd realize that the reason why it's like it. If I give an example of Bitcoin, it's because most of these softwares that actually underpin these currencies, they thrive on anonymity. You don't necessarily have to disclose who you are. You don't need to know the other person you're transacting with, you see. So it obviously goes against what the banking system is trying to put in place. When it comes to compliance and regulation, we talk about the KYC, your customer policies, right? There is no KYC when we're talking about digital currencies. It's just a transaction. If I have the money and you've got the coins, then let's transact, and that's the end of it. And then that's the same amount that's then being used to buy illegal arms on the black market or on the dark web. And those are the money, the currencies that are being used for, human trafficking and all these other things that we would want to talk about. So I just feel that if we're going to be moving towards the acceptance of crypto assets in the continent or anywhere else in the world, then central banks still have to have a control of that. They still have to regulate that. They still have to be regulated within the proper confines of the financial service sector. You see how most financial services within the world actually are trying to regulate fintech products. I think that's the same way that we need to adopt when you're looking at digital currencies or crypto assets. That way, we know that there is regulation and compliance. We can be able to protect customers. We can be able to do away with all these other heinous crimes that tend to be committed when there is no regulation. And also, the idea of anonymity cannot work, especially when we're looking at how that can be regulated, because KYC is a very important aspect of the banking sector. It's a very important aspect of money transactions, especially when there are large volumes of money that are exchanging hands. So I really think that you are right to say the continent, as it stands, is far away from being a completely cashless society. But I genuinely feel that we need to start embracing it, take it in a gradual manner. If you look at, I might never, I don't know if I had mentioned this to you, but there was a time in Zim that we actually had an ATM for crypto assets, and the government shut that down. The central bank said there was no regulation for it, and it completely shut down the operations. They were considered illegal. But if you are going to ask each other this question, does that mean that in Zimbabwe there are no people who actually own digital, crypto assets or trading in crypto assets? We're probably going to find out that there are a lot of people who are actually doing it. So the fact that that governments decide not to recognize the existence of crypto assets does not mean that the world is not moving towards that, or does not mean that transactions are not happening that deal with crypto assets. So I feel like we now need to open that door, accept that's where we are and where we are going to, and then the governments actually have to sit down and find ways to regulate this whole thing, integrate them into the financial system, the formal financial system, and actually have central banks be on top of it, so that we sort of prevent a catastrophic situation from happening within the financial service sector. So yeah, thank you so much, Christine, for coming in and for sharing insights. We're going to really have a conversation with regards to particularly mobile money within the context of Africa. You had asked me a question on Zimbabwe, and I don't think I answered that well when we're talking about other forms of digital currencies. So we're definitely looking forward to a conversation on mobile money. We've got examples in Africa of countries, Kenya, Zimbabwe, which are actually using, digital mobile money, and how that has actually helped with financial inclusion and gap and bridging the digital, the financial gap that exists between men and women and the youth and all these other historically marginalized groups. And also, we're definitely going to talk again about specifically regulation, how this can be regulated so that the content can move forward. So thank you so much for this. We thank you so much, our valued listeners. We value your feedback. Please write to us through our various media platforms so that we can talk and we can continue engaging. Ask any questions. we're free to respond and also suggest topics that we can talk about so that we together we can come up with ways that we can support development within the continent. Thank you so much.
Okay, Chido, I thought to mention lastly that when you spoke about the KYC documents, I remembered someone had suggested a topic that you could have about like the digital currencies and business and human rights in essence. So, for instance, as it is right now, the KYC documents through like getting loans and transacting money, they should go further to ask something is like, are you funding terrorism? Is human life in danger from the money that you're getting from the banks? And then they thought like expanding the scope to like the digital currencies and asking to what is this a threat to human rights? I thought it was quite an interesting topic to have maybe at some point in the future. Thank you.
Yeah, definitely. We should. We have so much that's lined up for oh yeah, I think it's going to be very interesting. Yeah,
Yeah.
we'll definitely talk about that too.
Okay.